Hey everyone, Josh here with Coastal Life. It is now 2023, we're in full swing and we're still getting a lot of the same questions of what to expect for this year. So we're gonna run through 7 real estate predictions to help give you a sense of what to expect for this year. So now let's kick this off. The first one is of course the interest rates. We know that we've seen the rates come down to mid 2s, high 2s. A lot of people got 3s and some people got 4s. Now, a lot of people also refinanced and ended up with rates in the 3s or 4s. So with the rates going up over the last several months and really peaking around 7.5, a lot of people were able to get 5s, 5.5, 6 to 7. We really don't think that we are gonna see 4s again anytime soon. And by soon, I mean this year, next year, or maybe the year after. What we can genuinely expect based on historical data with rates, based on the trajectory and the economists giving predictions, we are seeing rates come back down. So we saw them peak around 7.5% and we're seeing them trickle down now. So what we can comfortably predict are that we will see rates coming back down to stabilization around the 5s. So now, if and when we get rates to the 5s, what that means is that we will have truly healthy appreciation for real estate values, and we are going to see an uptick in buyer demand. So if buyer demand comes up, then the prices also come up. Now, it doesn't mean that we're gonna see what we saw before, where the rates were super low, which drove buyer interest this high, which drove the prices this high. We don't know if we're gonna see that. It's very unlikely, but it's safe to say that since a lot of people refinanced when those rates were so low, 2s, 3s, 4s, it's hard for some people who have a home that checks off 8 out of 10 boxes or 9 out of 10 boxes. And of course they would want something bigger, better, nicer, better location, whatever it might be. We have a lot of conversation with people that just can't fathom getting a rate in the 5s or 6s when their rate is 2.9 or 2.8 or 3.4. So with that being said, if we're not seeing a lot of lateral moves, people with a home moving to something slightly better, slightly bigger, slightly smaller, whatever their situation is, whatever their desire is, without those transactions, or at least less amount of those transactions, we're gonna see less inventory from that regard. So if we still have a inventory situation, then we are not gonna have as many buyers buying properties. So we're still gonna have less people buying homes, and that means that the rates won't skyrocket like before. So rates are probably going to come down to around the 5s, and that is going to create healthy balance in the market. Okay, so now our second prediction is all about inventory. We had a peak of about 6 million sales nationally, and right now we're about 30% nationally and locally down in our transactions. So we will likely see nationally about 4 million sales this year, and it'll definitely be helped by the fact that the rates are likely going to come down. Like I said, we've had a lot of people waiting for the rates to come down, and once the rates do come down to about 5%, that is going to help drive the transactions. Now, if the rates don't drop to a more healthy looking rate for most consumers, then we're obviously going to have an even bigger inventory crisis on our hands. So most likely, because rates are already on their way down, they're predicted to come down, we will have at least a healthy enough amount of transactions, but overall, we are down in transactions, and that's causing, of course, a supply and demand issue. Okay, so now this third prediction is all about the quality that is going to be needed from the consumer and the agent that they're going to hire. I've been saying it for a while, we are in a skills-based market, so there truly is going to be a flight for quality. And when you really look at the last time the real estate economy was down this much in inventory, we had significantly less agents because there simply isn't enough transactions for the amount of realtors that came into this market over this last couple of years during this boom. So moving forward, the market is just not going to be the way that it was, where just about anybody could sell a house. We're now in a market where we'll likely see anywhere from probably 1 out of 3 real estate professionals in the industry exiting the business. And that's really because the majority of agents that are out there are doing anywhere from 1 to 3 transactions per year as side income, part-time, a hobby, or more of like a retirement opportunity for themselves. So we're definitely going to see a lot of real estate professionals exit the business, and it's going to be significant over the next 12 to 18 months. The fourth prediction is regarding new construction and how it's really going to affect the economy, the real estate economy moving forward. So with higher rates and lower demand and fewer home sales, builders are they're down in their production. And we're already in about a 5.5 million deficit. And builders are having a hard time keeping up with the ever-changing family formation, especially right now with just the changing landscape with the economy. It's causing some concern with the demand and how builders will be able to keep up. And this isn't new. We had this happen in 2008 when that crash happened. A lot of builders, they paused on their production because they weren't going to make the money that they needed to. So of course, the builder demand or the builder supply, it really was like this, right? And that caused a supply issue that we're seeing, and we have seen over the last couple of years, and it's going to further from this economy that we're in right now. Number 5, rents are expected to come down. And over the last couple of years, we've known that it's been very challenging to find a rental, and almost everywhere you look, it's felt like the rents are through the roof. So what we're seeing now is that rents are predicted to drop anywhere from about 5 to 10%. And a lot of that is due to the fact that roughly 30% of renters, especially first-time buyers, can actually afford the monthly payment for the median home price. So with rates coming down, that is going to bring a lot of the renters into the real estate economy buying. And with the rents then coming down, it's just going to create a healthy balance there so that it's not so high with rents and the prices aren't crazy high. So it's just with the real estate market. So it's healthy in that regard. Number 6, this is where it gets good. This is what everybody wants to know, is what's going to happen with the appreciation and the true value of real estate. So now, of course, like we've talked about, the prices really skyrocketed and a lot of people had crazy appreciation in their property due to everything that happened around COVID. But what we're seeing now, and especially in the greater Boston market, and I don't just mean Somerville, Cambridge, and those towns, or even Revere and such. Greater Boston to many people really encompasses a lot of the North Shore and even Manchester, New Hampshire, right? So our whole area benefits from the healthy economy that Boston creates for us. And what we have seen time and time again is that we are insulated in many ways. Even in 2008, 2009, we had insulation from what we were seeing in other states and other real estate economies. And we aren't necessarily seeing prices dramatically drop. We saw a little bit of a drop as the rates really started to go up. And that was because the rates were around 7 and so many people had refinanced to the high 2s or 3s or 4s like we already discussed. And that prevented a lot of people wanting to make a move because it's hard to let go of that rate. And a lot of first-time buyers that haven't seen rates above 5 or clearly weren't buying in the 80s or 90s, right? We know that the rates were higher then. But in a 50-year average, we know that the average really boils down to in the 5s to the 6s. So when the rates come back down, and as they are, we're seeing a healthy flow of demand into the market. So again, we're insulated in this regard. There's always a healthy demand for real estate, and Realtor.com recently had a prediction that the greater Boston, North Shore area of Massachusetts, and this affects Southern New Hampshire as well, is going to see an appreciation of roughly 9%. And that's really good. That's very healthy. And considering the low inventory, and if buyer demand comes up, that is going to have healthy appreciation there. So I don't know if we'll necessarily see the crazy appreciation that we saw when the rates were down in the 4s. Obviously, that's just the perfect concoction for crazy appreciation, but we will have healthy appreciation. Realtor.com is predicting somewhere around 9. So I would say we are going to see appreciation and not depreciation like a lot of people are hoping for. But trust me, you wouldn't want to hope for home prices to plummet so that you can find a deal. You definitely don't want that. We don't want that to happen to our local area. So at least you know that if you're going to buy a home, you are going to walk into an asset that is going to be valuable for yourself. Lastly, number 7, are we experiencing or will we see a crash? Of course, comparing this to 2008, 2009, really, it's just not there. We can't make a comparison because what we saw then was a price crash. We saw values plummet, and we're not seeing that now. What we are seeing is more of an inventory crash. Whether you use the word crash or crisis, it's all the same. We are having an inventory problem across the board, and we're likely not going to see that fixed over the next year to 2 years. We may see it start to more stabilize by 2024 when the rates have more come to stabilization. Now, lastly, as a bonus, we want to predict that the Coastal Life team will become the dominant real estate team in our market. We've been growing steadily year over year, and we've been doing things differently and shaking the tree, really making a name for ourselves. And we would love the support from you as clients, because without you, we wouldn't be here, and we truly love helping our people. So if you need any assistance buying or selling, please feel free to reach out. Whether you're looking to do something this year or next year, let's just get an appointment, talk about your plans, and we would love to help you. All right, thanks for watching this.